Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew and with me is Smriti Chaudhary. We'll take you through the next half an hour or so of trade. Very quickly taking through where the markets are currently, and you have cuts of about 0.2% for the Nifty 50, but a majority of the drop that you're seeing is in the broader markets, which is seeing a bulk of the selling right now. The mid-cap index, the mid-cap 150 index, down about 2%. Or 2.2% in fact at this point, and the small cap index seeing even more cuts, down close to 2.5% at this juncture. So very clearly the texture of the market or the market breadth tilted in favor of the declines. If you look at the key indices and where they are moving, you have sharp cuts in media as well as metals. The Nifty metal index losing as much as 3% in trade right now. And in fact, the PSU banking index also dropping as much as 2% in trade today. The Nifty Bank, though, on the other end of the spectrum, is gaining ground, but only by about 0.5% or thereabouts. FMCG also as a pack gaining as much as 0.4%. Now, one of the stocks that has been in focus over the last few weeks on account of regulatory action is 197 Communications, that is Paytm. It is down about 7.8% in trade today as well. There is certain source-based information that my colleague Vishwanath Nair has picked up, and he's joining me now to tell you the latest there. Vishy, we had the RBI governor and in fact Deputy Governor speak about this entire saga yesterday. What's the latest that you're picking up today?
Right, Alex. So the RBI governor and deputy governor were very clear when they spoke at the press conference yesterday that if you are going to be in violation of existing norms and if you do not do corrective action as suggested by the regulator, then there is likely going to be action against you. So supervisory action against you. It could be in the form of penalties or business restrictions, depending on how situations evolve. Now, what my sources are telling me with regard to the situation that has evolved in the Paytm universe, specifically with relation to Paytm Payments Bank, is that some of this action, some of the RBI's action against this entity could have been spurred by unexpected outcomes that came out of the Payments Bank universe. Now remember that payments banks as entities were originally conceptualized 10 years ago. Vast majority of the Payments Bank universe has not really been able to make a dent in the financial services ecosystem, except two entities, as Fino and Paytm. These are the only two entities that have been able to use that the ecosystem or that framework effectively. Now what the sources are saying is that there was a lack of engagement between the RBI and the Paytm Payments Bank entity, primarily because there was really no point person at the Payments Bank. The CEO, it wasn't clear whether the RBI should be talking to the CEO or the board or the promoter, considering that Vijay Shekhar Sharma owns 51%. So he's the majority owner and pretty much calls the shots at this entity. The other problem that came up here is that the fact that the Paytm Payments Bank's reach far exceeded what the regulator expected from the Payments Bank universe. And in fact, if you look at some of the concerns that have emerged in Paytm Payments Bank, which was with regard to money laundering, potential money laundering, and accounts being, not having adequate KYC. Now, these problems are actually much smaller than what one would think would deserve this kind of action. That's what the sources are telling us. They're also saying that disclosures as well as compliance processes, which are established for the universal banking universe, are not so well established within the Payments Bank. Which means that whatever the Payments Bank does, essentially the regulator is looking at it from a slightly suspicious point of view. And therefore, without that kind of established process, there was really no way for the Payments Bank to have adequately satisfied the regulator with regard to compliance. Now, I want to put a disclaimer here. Nobody suggesting that Paytm Payments Bank did not do something wrong. Nobody saying that the regulator was wrong in taking steps against the entity. However, maybe the severity could have been a debatable topic. That's what the sources are telling us now.
Absolutely. Thanks so much, Vikshi, for breaking that down for us. Let me introduce you to the guests we have today. We've got Vaishali Parekh as well as Ashish Maheshwari joining in. To the both of you, thank you so much for taking the time. I believe we've got Vaishali right now. Vaishali, we've seen a few stocks react very sharply to results, and these are stocks that have run up quite significantly. One of them, of course, RVNL from the Railways pack. Disappointing numbers that has caused a bit of a crack in the stock. PFC is another stock that has gained very significantly over the past several months. It's down about 11% in trade today. How does one react to some of these news items and the reaction that you're seeing in the stocks then?
Very good morning, first of all. But yes, rightly said, actually, when we are talking about all these stocks, I mean, since a very long time, these stocks have been running, I mean, and there was no respite in that too. So I think it was already a time to book profit. But right now, seeing how it has broken the trend, I would really say that yes, one should book, exit the stocks for now, because mid-cap sector seems to be exhausted. And I think these stocks can go in for further correction. So I would say it's time to exit for some time. Let's see how the trend follows in coming days, and then we can have a relook.
All right. Good morning, viewers, and good morning, Vaishali. We'll quickly jump into the questions now. The first one's coming from Tarun, and they're talking about Aster DM Healthcare. They've already bought in the shares at 437 levels. They want to know if this is a good time to accumulate the stock. Vaishali, would you suggest buying at this juncture, or maybe wait a little bit more?
I would say actually it's better to wait a bit, because I think 400 would be a good level to look at, and that's where I think the support also lies. So in a market like this, where there's a lot of uncertainty and volatility, I think one should wait for the support levels and buy accordingly.
Okay. BCG is the next counter that we're looking at, and in fact, this is a question from Nitish Gupta. He's writing in from Bengaluru, and he's bought at levels of 20.3. And I mean, the stock is currently trading below that mark, of course, at 18.7 or thereabouts. He's willing to hold Vaishali for a period of a year. What should his strategy be?
So I would say actually the stock has been consolidating, and I mean, of course, it just some time back there was an erratic trend, but right now I would say it's consolidating. So I think to hold, now that he has held on for so long, I mean, hold the stock with a stop loss of 17, and one may get a clarity only about 21. So right now I see a range of 17 as support and 21 as resistance. Once it moves past 21, there could be 21, there could be some clarity of this stock going towards 23, 24. So that's how I would look at this stock.
All right. Ashish is now joining us. Ashish, a couple of minutes back, we were talking about RVNL. And we're seeing some pressure in the stock today after disappointing results. But on the railway sector, and particularly on this stock, we've already seen quite a bit of an upside in the stock in the last couple of months. How do you see this playing in the next couple of years, rather, for the longer term, the railway pack?
Yeah, railway pack, as far as long term is concerned, there's no doubt in mind of anyone that this sector will continue to perform on account of sizable capex which is happening in this particular sector. So all these companies will continue to do well. I think RVNL only issue was that for last 3 quarters, company is not able to deliver as per analyst expectation. Because if you see the stock price from 50 rupees, the stock went up to 350 rupees. Everything happened in 1 year time frame. And at that time, like if compared to other peer stock like Ircon or Rides, you under deliver, then certainly some sell off is bound to come. And this is what's happening in this stock also. But long term, I'm bullish as far as railway sector is concerned. Only thing is, as this particular sector was also quite hot along with other PSUs, so some profit taking is happening.
So would you suggest buying, because now the stock is slightly dipping?
No, I'll still not suggest to buy because I think after this quarterly numbers, still we haven't seen any institutional participation. One thing is also we must take into account, particularly in RVNL, if we see last 1 year shareholding pattern, neither FIs nor DIs have increased their stake significantly. So it is all about the retail money which is flowing in the stock. This is the reason so much movement is there in the stock when results are not as per expectation. But surely I'll be a buyer in this stock at 200 rupees, because in long run, the Navratna company and the kind of order book they are building up, I think this stock will perform. But wait for 50 rupees more correction.
I want to talk about HDFC Bank, and this is a question coming in from Amit. Pull up the year-to-date chart. This is not every couple of months that we have a conversation like this about HDFC Bank. It's 13 odd percent, or at least it was 13 odd percent of the Nifty 50, and it's down about 17% in the year-to-date period, right? So the question is, should you buy at this juncture? Of course, Amit is wondering about rumors circulating about Paytm Payments Bank, and I think a lot of rumors circulating about who will buy, if at all it will be bought. I don't think that's what I want to focus on. Ashish, the question is, on the fundamentals, loan growth doesn't seem to be an issue. If anything, deposit growth was an issue in the third quarter. Do you think that the stock is beaten down too much? Should it be bought at this juncture?
So still, I think this is one of the laggard stock. If you see entire banking rally, and still there's no solace that, or there's no bottom in sight. Because again, the problem is this almost 80% is held by institutional players, and given the market cap also almost 10 lakh 50,000, 60,000 crores is the market cap now. I think the bank is fairly valued if you ask me at 1,400 rupees. So now, if you ask me from the risk return point of view, I see better returns in other stocks like Axis Bank or ICICI Bank instead of HDFC Bank, because valuations are already quite stretched, and post HDFC merger also, I think still bank is taking some time to show the kind of numbers or the ratios which analysts are looking for. So wait for HDFC Bank, maybe 1325, 1350 will be good level to enter.
Right. So wait is what Ashish is saying for fresh buying into HDFC Bank. But next up, we're talking about DCB Bank versus City Union Bank. This question is from Satya, and he wants to know which is better from medium-term outlook. Vaishali, comparing both of these two, which one would you pick?
Well, so City Union Bank actually has really not performed, and I think it's quite corrected, and risk-reward ratio right now looks quite favorable. So I'm talking about it purely from technical terms. Well, 129, 130 was the previous low, and chartically also it's quite oversold. So I think City Union Bank can be bought with 128 as stop loss, and for a trading target of 140, 145. And as far as DCB is concerned, well, it's just got its corrective move. There is still scope of further downside, because from today's candle, what I see, it is still likely to go towards 120 levels. So that is the level where I would have a look.
All right. I want to pull up Zomato next, and we've got a question coming in from Geeta. She's asking whether it can be held for the long term. She is wondering whether to buy at levels of 144 or thereabouts, which is where it is right now. Of course, the company just posted its numbers for the third quarter in a stellar set. It's a net profit of 138 crore in the quarter, and that compares with a net loss of 347 crore in the year ago period, and that's on the back of better than expected top line growth as well. Ashish, the question is, should it be bought from the long-term perspective? A lot of people are talking about the potential in this space. The question is that in the price right now? Ashish, that's for you.
Yeah. So even if you see quarter over quarter, from 36 now, this has come to 136 crore profit from September to December quarter tells all the story. That now company is focusing more on profitability, and whatever the Blinkit related issues were there where the stock was hammered down, it is now on the back burner. And I think this is something, a classical story. You have 138 crore quarterly profit and 1.25 lakh crore market cap now of Zomato. It shows the kind of confidence institution players are having now in this company. Besides this, if you see DI in last 1 year, they've increased their holding from 7% to almost 16%. So whatever pre-IPO investors have exited is mopped up by our domestic institutional investors who seems to be very bullish. And whatever the brokerages report you see on Zomato, from 170 to almost 200 plus targets are also being given. So in my view, you can remain invested here. In fact, at 140, or if you get below 140, this will be a good buy.
All right. We'll slip into a short break now, but we'll take more questions on the other side. Stay tuned.
Welcome back. You're watching Ask Profit on NDTV Profit, and I believe we've got a caller on the show today. Ravi Kumar from Chennai is calling in. Ravi, if you can hear me, what's your question for our experts today?
Yeah, my question is regarding a stock called MSP Steel and Power Limited. So I would like to buy the stock, and then it's quoting around 29 rupees. Whether it's the right time to buy? So I'm a long-term investor also.
Got it. So, Ravi, how did you hear about the stock, and what was the idea that you had?
No, actually, now I was going to steel industry, the capital market magazine. That particular, this stock only was trading low price and looks to be turned around the last quarter. And the results also became positive, and it was negative to positive. I thought, okay, still it's a low price there, right time to buy.
Understood.
So I need some suggestions from your side.
Understood. Let me take it to the fundamental expert then. What about MSP Steel, Ashish? What do you think of it? Have you looked at this company?
Yes, I looked at this company. In fact, from 7 rupees stock went to almost 33 rupees. And I think exchanges put into surveillance also. That's why we have seen selling from 33 to now 29 rupees. But I agree that as the entire cycle of steel industry is reversing, so we have seen excellent set of numbers from mid-sized steel companies also. But one thing we must be always present that because steel prices are directly related to what is happening in the China and the metal market globally, and as now many commodities prices are also at 1 to 6 month low, like lead, copper, nickel, etc. So some pressure may again come. Though fundamentally things are improving, but you are taking a call on steel prices. So instead of this, I'll suggest to remain with the large cap stock in steel instead of small cap stocks. So my picks will be more like Godavari Power kind of a stock, or Jindal Steel and Power instead of MSPL.
Right. Thank you so much, Ravi, for joining us, and thanks, Ashish, for your answer. Now, Ashish, we've got your fans on the show. We have Satya and Sid, and they've asked me to convey to you that you're one of their favorites. And we have a question as well. Sid wants to know about Avanti Feeds. He wants to know if this is a good time to buy the stock. The stock is down, I believe, 4%, 3.5% in trade today.
Yeah, I think today's downfall in the stock cannot be perceived that a stock has turned bad or there's something, because if you see indices and small cap, mid cap indices are almost down 3% on account of profit taking. So I don't think so any issue as far as good quality stocks are concerned. Avanti Feed has also given very good return, and now as in budget, government has also given a lot of emphasis on aquaculture related work or exports of aqua products. So companies like Avanti Feed will keep on doing. In fact, 475 will be a good level to enter into this stock also.
All right, let's go across, Vaishali, to you on NBCC. We've got Subhendu who's asking this next question. Could it be bought at the current price? And what, according to you, is the trajectory that the stock is likely to take? It's under significant pressure in trade today, down about 6.5%.
Yes, I agree. But I think, it is better to accumulate because we still don't have a clarity whether the market is halting here or are we going to see further corrective move. But the trend right now looks pretty much intact. And I would say it would be a better strategy to accumulate with 130 as support. Because when I'm looking at the monthly chart, we have upward projection of 180 to 200 levels. So NBCC is a buy at every decline for now.
All right. Next up, we have a question from Sanal, and he wants to know about Cochin Shipyard and RT Industries as well. Now, Vaishali, this one's from you. What are the targets on these two stocks, Cochin Shipyard and RT Industries?
So Cochin Shipyard, I would say continue holding with 800 as support and look for a target. A near-term target strategy would be around 945. If we move past that, there could be a scope for the stock going towards 1050 to 1100. Now, as far as RT is concerned, well, it is in a trending mode, and in spite of all the choppiness that we have witnessed today, it's holding on. So that implies the inherent strength of the stock. So I would say RT Industries can be bought with 600 as support. And I think long-term positional target can come to 700 to 720.
Got it. We've got another question from Vijay, and he's writing in from Chennai. He's asking about Crompton Greaves Consumer Electricals, which he's bought at levels of 296 in December. It's currently trading at 286 or thereabouts, and he's asking what action should he take? Should he hold or should he exit? He's got 900 shares. I will come back to you, Vaishali, on the charts. How does it look?
So continue holding. There is no strength right now. It's in fact showing some signs of profit booking. If 280 levels break, then I think one should exit the stock.
Let's take the next one, and it's from Nirmit. Nirmit is asking about Hudco. And he's bought at levels of 114 or thereabouts, and he's got 16,200 shares. So he's making some gains here. The question, Ashish, on the fundamentals. Oh, actually, no, he's asking for a 1 month view. So, Vaishali, I'll come back to you. On the charts, he's making significant profits. Should he take some off the table?
I would think so, yes. Partial profit booking should not be ruled out at this level.
What are the levels that he should watch out for? And if at all you're suggesting a trailing stop loss, can you guide us with the levels?
So trailing stop loss comes at around 165 level. So that will be pretty much still 20 rupees below the price that it is right now. So if 165 levels break, 160, 165 is a very strong support level, then this stock can get into a corrective mode and perhaps go to even 150, 140 and so on. So 160 is the base for support.
All right, that brings us to the end of this edition of Ask Profit. Vaishali as well as Ashish, thank you so much for joining in. Viewers, we'll be back on Monday to take all of your questions. From Smriti and myself and the team that put the show together, thank you so much for watching and have a great weekend.